Good evening, this is Rodney with the Triton Wave Market Outlook for Tuesday, January 7th, 2014. And this is brought to you by Triton Wave Consulting, home of the Triton Waves. The Triton Waves are early warning market timing indicators used in all time frames in all markets worldwide. Okay, I want to start off the evening looking at the same parameters we were looking at last time, the weekly and the daily on the ES. I want to apologize. In the last video I was comparing the ES to the to gold for about 3 minutes without even realizing it, so my apologies for that. But what I wanted to look at, the same thing that I talked about last week. This is the high right here from September 07 to the low of March 09, and the 1272 extension. Excuse me. The 1272 extension was 1836. When I did this the last time, I'm going to bring this out, and you can see that the extension was breached. It was on its way to being breached by about 10 points up to 48 from the 1272 extension that's like 37. Well, that to me was the line in the sand, and I was actually looking on lower time frames for that to reverse. Now on the daily, when this comes up here on the daily, you're not going to see the reversal, but you're going to see it on the lower time frames, and I'll show you that in a minute. But my line in the sand for a possible turnaround all the way to the 21 EMA was this line in the sand. Well, as it happened, it did before the end of the day, about 12 hours after I did this video, went from 1846 and closed at 1824. So it was a total reversal day. Today, we kind of like, was a little wishy-washy. It was down about 300 or 400 S&P points, three and a half or 4 S&P points, maybe 5. And this is actually a continuous chart. It was down around this number, like 1817. So since 1820, this is a live chart going on here. It doesn't look very live because it's a weekly, but in fact, it's the price down here is 1824.50. The price up here is 1824.50. So that's going on right now. These are 24-hour charts. So far that line in the sand is holding. Now, on a normal playback or retracement, you can see pretty clearly it's either to come down to the 21 or the 55 EMA. So back on 5/12, May 2012, it hit the 21, and then it slammed down to the 55, and then it stayed there for 2 or 3 weeks, and then went back up again. Okay, so the difference between the 21 and the 55 way back in May of 2012 was, you can see on the right on the numbers over on this column. This is the 21 at let's call it 1345, and the next day it was 1296. So I forgot the number already. Okay, so 45 to 96. That's a 50-point move. On this one, it came down for 2 weeks. It spent on the 21 EMA. When it finally broke through, it went from 1402, and 1.5 weeks later, it was 41, 42, 43 points lower. This one held, it went in between on December of 2012. It held in between the two moving averages. This one pretty much held the 21. We're going back to June of 2013. This one held August 2013. This one held in October 2013. If this is indeed the line in the sand here, and it does not move above or close, excuse me, close above this line of whatever that line is. What did I say? 1836. We have a huge, huge chance of shorting this market down to at least 1756. At least. Okay, so this is going to rise 17, let's call it 1760. If it comes in between there, it's going to be 1700. If it comes all the way down to the 55, it's going to be 1662. And we're at 1824. We're talking about 120 points on the S&P. But at the very least, we're talking about 40, 50, 65 points on the S&P. No market is going to go straight up. So it's really time to play your cards very, very close to your chest. If you're playing a runner on the upside, have very close trailing stops, because you could lose everything that you've made in the last 3 months. You could lose in 2 days, and it won't be a pretty picture. All right, let's put the daily on this side, and we're going to put the 144 over here. Okay, so the 144, the same thing. The daily, I'm just leaving this up for reference, because you can see the 1838 extension here, and you can see on the 1592 right here is the minor Triton wave right here. Okay, so let's see how many times it's hit that since October of 2011. It's hit it once, twice, 3 times. You come all the way up here, and if the weekly kicks in like it looks like it's going to, then it'll come back down in here. It doesn't mean that it will. Strong likelihood that it will. Okay, we're talking about 1609. I think on the weekly. Let me see. I was talking about 1670. Actually, I like the picture on the daily better. It's a lot more distinct. So we could actually come down to 1692 here and not have any interruption in the uptrend, because T4 and T5 is still going to be above zero even if this daily comes down here. But however, let me remind you, that's 16, let's call it even at 1600, that's 230 points away on the S&P. All right, let's look at a 144 and see what we have here. On the 144 back in let me see, December of 2013, you can see at the beginning of December, T1 went below zero, T2, it hit this line, so you either wait for a bounce or it looks like it's going to go down here, but you have to be very vigilant, because the rule of thumb is whenever you take a position, look immediately for an exit. Don't just walk away from it. So this T1 did go above zero, right in between here on a much smaller time frame. You can actually see it before it takes off. But even if you got in at 1799, 1800, it's a nice move for about 12 trading days, all the way up to 1846. And now T1 is starting to roll over. But even more than that, if you scroll out here, you can see the T4, which are much, trendier lines. much more long distance line. This has already gone below zero the last two hash marks. So don't be surprised if this starts coming down. And even if it comes down to 1795 rather, and maybe a little bit more like 1776, which on the daily we'll put it up to the 55. That's all a real possibility. Okay, so I'm going to make this a 55 on the left-hand chart. Actually, let's make this a 144, and we'll make this a 55. Okay, so this entire chart on the right, the 5500 is Globex price, and the 14400. You'll have to excuse me. I got like maybe an allergy to computers tonight. I don't know. So this whole chart on the right, only takes up as much as right where this is right here. So this is basically the month of, from here to here is the month of December. So you can see even though it goes down, let's try to match this up here. Let's match up the 144 to the 55, and you can see when it goes down right here, when T1 crosses right here, the T4 is also crossing, and T1 and T2 have crossed already. So this was a nice move from 1809 down to 1792, which was a 16-point move in about a day. Excuse me. Okay, so smaller time frame, you can take more advantage of it. So this one, you may have stayed short if you stayed with T1 on the 144. This is why I like the smaller time frames for day trading. And you can see right here it comes down again from 1811, and it comes all the way down to the major to the major wave at 1757. So that's actually 55-point move. Okay, I just took a few minute break, about a 10 or 15 minute break to have some peppermint lozenges from Trader Joe's, and I hope that does a trick about my coughing. Okay, so on the right, 55 minute, on the left, 144 minute. They're both Globex timing. This whole chart on the right takes up this just much room on the left. But you can see early moves on the Triton wave on T1. This moves above zero for 1791, and this is just in the last few days. Or I'm sorry, this is a month of December. So 1791 to 2 to 1811. Drops below zero T1 here. Goes from 1804 right down to the major Triton wave. Okay, wait till it comes back up, or you can play the bounce between, you know, once it gets above both the major and the minor waves. Sometimes I stay up there, but you have to take your cues from the waves over on the 144 and also the 987 tick and the daily, and it's not just a one-shot deal. Although it looks like you could play this you can just play the 55 if you're willing to sit on it for a few days. So this is a move from 1778, and yes, it did dip down here, but this wave never wavered below zero. So this was still a good call from 1778, and then actually it stayed all the way up until it hit 1837. So from 1837, 1836 area, this has been a sell. Now, in spite of the fact that we went up here to 1848, that's like another 10-point move above, 12-point move above, and it was also remember on this side it was slightly above the major resistance of the 1272 extension on the um, on the weekly. This looks right now like the S&P could come down. Okay, we're up 300 right now. It's midnight. It's midnight between Monday and Tuesday. But I want you to take a look at this. If we move out here, the T1 is below 0. T2 is below 0. T3, T4, the last five or six hash marks right below here on the 55, and now the long-term blue ones are down below 0. So this is a good candidate for a short. Now, where's it going? It looks like it wants to go at least to 1817, and if it reaches 1817, it's 1824 right now, and this is completely, and T5 is below 0, that's definitely a short. Where's it going? My target would be 1777, and this is just off of the 55. This has nothing to do with the daily or the weekly. This is all short term. I'm going to move the 55 over here and make this a 21. 21 does not look like a good chart. I don't like the way the wave patterns are. So let's move to a 987. Okay, so you can see the 987. This whole right chart here is just like a little blip on the left-hand chart. So it looks like every once in a while you can catch a good one here, but these waves are moving. The price is moving too fast to accommodate the wave. So you see this one comes halfway up the wave. It's a no-go. That's a no-go. It appears at the bottom. So you just have to keep breaking this down. Let's break it down to the 144 and see what we get off of that. Okay, the 144 doesn't look so hot. Let's try the in-between one. Let's try the 377. Okay, perfect. All right, now you can see the right-hand chart, 377. And we're looking at the 21. I mean, we're looking at the 55 on the left-hand chart. So this entire move here is this little piece right here. From here to here. It's nothing. It's really nothing. It's like a day and a half worth of moves. Let me just... But these are, in spite of the fact that it's just a little blip on the 55, and I'm sure, you know, obviously less on the 144, the daily and the weekly. These are tremendous moves just using this this simple wave pattern. You can see all these moves here. Just this is a simple pattern of of the 377 using T1. Okay, so let's start back here. We're starting at on January 3rd. Okay, we're at 1830. Moves down. You clip it out right here. 1824. You're in 1824, and you're either playing it to the major, to the major line here, or you can hold it till it comes back down again. Now the very short-term ones you can hold on to because they're going to respond more actively to the price action. So this actually is the same price that you would have gotten if you held it over here. And then you come back here, short it down to here. These are all like 4 or 5 point moves. 24 up to 32, that's an 8-point move. Even if you held it back down here, it's still a 5-point move. Back down here, that's a 3-point move. You can just see you can play it back and forth and back and forth. Here it goes above at, you know, we're right here. When it hit the When it hit the minor wave of the 55, right in here, is when it came all the way down here. So your exit can be the longer time frame charts on either the major or the minor wave. Okay, so this comes down to which turns out to be the minor wave on the 55. If not, then it's the crossover, so you're out anyway. It's a double out. And this is at 1818 if you went long on this for a bounce off of the 55, or just a bounce up to the minor wave, and when it goes through you can hold on to it or let go of half of it, and then you come up here to the major wave, you're out. Okay, so then and it goes on and on. So you just have to find the wave that's appropriate. You know, now I already said that I think this is coming down, and it looks like the 55 is breaking down on T4 right here. You see, that's not quite down all the way, but there was an expected move to the upside at the close today, with all the volume coming in, and none of that happened. It just like dropped off 400 points into the close. All right, I want to look at gold here. Gold. Spot gold, electronic gold, right here. All right, let's look at weekly. I want to make sure we get gold on both sides. All right. My data, this is electronic, and I'm going to stick with it because I have everything on electronic right now. Okay, on the weekly on the left, you can see it bounce off for 1, 2, 3 weeks. It bounced off the minor wave, and it looks like it wants to come up a little bit. However, on the daily, if you look and see how I track this across here on the, let's see here. If I track across on the daily, on the gold, on the right, it's approximately the same size screen. I can shrink it up just a little bit more. Okay, so that screen's approximately equivalent. So on the weekly, this has been down for a long time, and even if you just go back to T3, it's been since March of 2013. So definitely in a long-term downtrend. So let's just make this the daily over here. And we'll make this on the right the 144. Okay, so now on the daily, T1 is below 0 completely. T3, T5, T4, T3, T2 is not. T2 is the one that's hesitating, but it's come right back up to its resistance right in this area, right in the 242, 254 range. So if it does trickle up overnight, I don't see it going past here. This is my line in the sand for the daily is a 255, and since the 21 EMA has crossed under the 55 EMA, and they've both crossed under the major wave here, then that is a sell signal, and you just have to look for your opportunity on the slower time frames, on the smaller time frames to get in. So we're looking at the 144. Now the 144 has been holding ever since right down here, 10/31. So that's October 31st. It's been below the minor wave here and came back up, kissed it, came back up, and even when the 21 and the 55 crossed, it came back up to resistance of the minor wave. Came back down here, and you can basically track this on the 144. You can see that crossing down here. And this is a quick 1238 that's a quick 50-point move, and we did catch that one. This one bounced back up, and we're right into this area right here. So this is a very critical area for okay, this is the line I'm looking at right here. And I'm looking for this to hold right here at 1240, and maybe a little fluctuation like it did this morning, and again here. Hang on one second. So it bounced up today several times actually, came back up and hit it, went below it, bing, bing, bing. And each time you think it's just going to like, boom, go straight up and maybe, you know, like, whoops, I don't mean to do that. Let me see here, straight up. There's always a possibility this could just take off and go to 1326. All these are above zero now, and T5 is above zero on the 144. Not a good sign for bears right at this moment on the short term. On the weekly and the daily, much better looking on the downside. Very short term, this could get a little juice to it. Okay, so this is what I'm watching for. I'm watching for a break either way here, a sustained break. That this is not, you know, a break up above and then come down here, and then I have to look at this wave to see what's going on. All right, I'm going to make this a 55 on the left, which is a little bit smaller than this 144, and I'm going to go to a 987 tick chart. So it's 55. See, now this is still above zero. T1, T2, T3, T4, T5 are still above zero. The only difference is that this is a non-confirmation wave lower. This is a lower high, and this price is a higher high. However, it's in between the major and the minor waves here. On the lower time frame, it's above both the major and the minor has crossed the major. So this could possibly have a potential, you know, like 13-point move. So I'm actually looking for it on the downside, but not at this moment. And that's where I make the calls to the subscribers. When I see a move that's justified not only by the price action, but by the major minor wave crosses and what's going on with the moves on the left-hand side. I mean the 55-minute, and make sure everything is in sync, because it's not just one simple signal. See, on the 21, this looks like it's going to go down. So we definitely have mixed signals here, because this on the 21 and on the 987, it's moving up right now. It's up $5.70, and we're a little past midnight between Monday and Tuesday. And so, you know, this could come up and match those old highs or go a little bit higher, but it does not take away from the fact that T1 and T2 is below zero. So this can fudge around a little bit here and then turn around. The idea is to watch it carefully and make sure that you're catching the exact moment of the turn. Okay, for those of you that heard my last video 4 days ago, you don't need to listen to this part. It's an offer of my services for Triton Wave Consulting. What I have done is I have extended the date from the 7th to the 14th because I had some mailings to go out to alert everyone that the offer, and it went out like 3 or 4 days late. So just to be fair, I'm extending this to January 14th. For those of you who have not heard this, I will give you a quick summary and then let you go. The Triton Waves are a premium trading algorithm that can be applied to all stocks and commodities in all time frames. Triton Wave Consulting owns the Triton Waves and is making this offer to experienced traders to participate in gold. There's an opportunity here using the Triton Waves for entry points to cash in on small as well as large moves in gold. When the signal presents itself, you will get a text or email with a recommendation to go long or short. You, as the experienced trader, will set your own parameters for profits, stop losses, and trailing stops. When the trade changes courses, you'll also be notified to cover the position. The gold market can be extremely volatile, but to a seasoned trader using the Triton Waves as a guide, that volatility can translate into big profits. During 2013, the Triton Waves caught most, if not all, the major moves in gold. The fee for trading gold with Triton Wave Consulting is a fixed monthly income of $35. It is not refundable. It must be paid in advance, and you will be sent an invoice every month to renew it. You may stop at any time. In other words, this is not automatically coming out from your credit card. This is all initiated every month. If you like it, you continue. If you don't like it, you stop. This fee is set to increase to $5,500 on the now extended time of January 14th, 2012. If you sign up by that time, by the 14th, the old fee of $3,500 will apply to you as long as you remain a client. This offer is exclusively for gold traders and for trading gold. If you want the S&Ps, that's a whole other deal. If you want stocks, that's a whole other deal. This is just for gold traders. I'm only looking for experienced or professional traders. This is absolutely not for beginners. This is not a hand-holding service. I'm telling you when to get in, what to expect, and you have to use the appropriate measures of knowing your own parameters for stop losses, for profits, and for trailing stops. That's all I have. Have a great evening, and I will see you at the next update. Good luck trading.